provide.
All right. So today we're going to go through Chapter 8, which is just other real estate matters. We've done all the forms, we've done all the contracts, we've done all the notices and agendas and all that sort of stuff. To let y'all know, I did re-record Chapter 6, which was all the other 5 contracts, and I put that up online this morning. So I would highly advise you watch that because, again, we went through one contract, that is the other 5 of them. So there's going to be probably questions on those 5 that you will not know if you have not watched that lecture. So it's in Chapter 6's course materials. I know Justin has a lecture in there, and I have a lecture. Mine's like an hour and 5 minutes. Watch mine. I think Justin's is like an hour and 50 something or whatever. But again, the contracts are all outdated. So even though his lecture's in there, a lot of it's wrong. I was watching it, taking notes and going, that's not right. No, that's not good anymore. Oh, that doesn't make sense. So again, if you're watching it, make sure to watch mine just because it'll have all the updated contracts, which is the stuff y'all need to be knowing. All right, learning objectives. So we're going to describe current forms of fraud and how it affects licensees and the public. Identify on which forms brokers' fees are agreed upon. Identify the protected classes under the fair housing laws in Texas. List disclosures that are required, permitted, and prohibited, and describe HUD's occupancy standards. All right, so real estate fraud. There are many different ways that you can perform fraud in real estate. One of them being flipping. So flipping is very common in real estate where you will buy a house, improve it, sell it. I know my dad did that to cars for a long time and stuff like that. It's very simple. You buy something, you fix it up, you sell it. You see that on TV all the time as well. The reason that it is considered fraud, it's not fraud all the time, but it can be a case of fraud. And the reason for that is lenders, they are expecting a certain return on their investment. So if you were a lender, let's say Aiden loans me $300,000 or let's say $200,000 to buy a house. He loans that to me, I pay for the house. He's expecting 30 years of payments from me to pay off that mortgage, along with the interest. If, however, in 6 months, he's fixed it up and he sells it for $300,000, he'll pay me back my $200,000, and as a lender, I only make $150 on interest or whatever. So it is considered fraud because there are certain cases where they will require a certain amount of time to stay in a property or not. So you can't exactly just buy it and sell it. You have to buy it, live in it for a certain period of time before you can sell it. So that is why flipping is considered a way to do real estate fraud. Now there are, another thing would be buyer rebates. So buyer rebates, it would be if a buyer, for example, receives money back on their purchases. You can, the reason this can be fraud is, again, if they are trying to, you're paying $200,000 for a house, but you're getting a certain amount back, you're paying that to the mortgage company, all that sort of stuff. You end up kind of fraudulently scamming people out of a certain amount of money they think they're going to receive. Another, I'm 30 seconds, so you just want to say, yeah. Another big red flags. So there are a lot of different red flags in real estate fraud that you have to watch out for. And almost everyone involved in home buying transaction could be involved. The agents, the mortgage broker, the appraiser, the title company, and the lender is usually the victim. That is one thing with real estate fraud is it usually comes back on the lender as the one who's the victim. I know a good example Justin gave is if, let's say I am purchasing a home, Aiden is my agent, well, he can contact Justin, who is an appraiser. He knows that the house is not going to appraise for value, but he can tell him, hey, if you actually say it's worth $300,000, we'll cut you a section of our commissions in my payment or whatever. The appraiser gets it, and you can have the inspector involved. They get some of the cut of the money and all that sort of stuff. And then what happens is, now it all goes through. It turns out the house is not worth that. Everybody's been paid off. Everybody's good except for the lender, who's now been the victim because they gave out a loan that's not worth what they should have given, basically. But I know Justin kind of explained that's kind of what basically happened in 2008. That's kind of how the financial crisis all came about. I was going to have him explain that a little bit more in detail of how that happened. But basically, fraud is what happened in 2008 that caused the mortgage bubble to kind of implode. So,
You ready?
yeah.
All right, Aiden, go on and tell them everything.
Yep.
Well, so in
Mr.
lending,
Finance.
they have what's called prime and subprime loans. Prime is where highly qualified. We can get into the AAA, all that, and the ratings on it, but we'll just say for now we'll stick with prime and subprime. So prime is when a applicant.
Stand up because they can't see you online.
That's what's yeah. I was ready to give this speech, but no, we're ready. So subprime and prime loans. Prime is when you have good credit, good backing, you have very good income. So they pretty much know that you're going to be able to pay back the loan in full and on time. Subprime is where you might be lacking on income, or your credit score might not be as good as it should be. So they'll rate it as subprime. And so what was happening during 2008 is really the banks were checking it all, checking income levels, credit scores, not as tightly and regulated as they should. And what they do now. So they were pretty much just handing. I mean, you could walk in there and you could say you work at any kind of place. I remember an example Justin's given is you work at McDonald's and you say you make $300,000 a year. Well, the banks were not going back and checking against that and making sure that you make $300,000 a year. So they were qualifying you for loans that people that made $300,000 a year would qualify for. So they were handing out a bunch of money to people who
So I got a
wanted.
question. So you're telling me Miss Vita could have called me up as a banker and said she made $300,000 at McDonald's?
Yeah, technically.
And I
pretty
would give her
much.
money?
Well, yeah, because in the end, you're going to make money off of her. So
I
why
work
would you
corporate.
not hand out the money?
So you work at headquarters.
I work at corporate.
Yeah, okay. Well, that makes sense. You probably do. So what was happening is they were handing out a bunch of subprime loans, and kind of the way the loan market works is you're not really technically paying back the bank itself. They package all of their loans together into pools and then sell them off to investors. So say I have, you have a group of homes that will bring you $1 billion in revenue once they're fully paid off. So they're gonna make $1 billion. So they'll sell that pool of loans to an investor for $500 million. So that investor will make $500 million off of that investment itself. But with the $500 million that the banker receives, they'll start handing out more loans with that money, so they can pull them all together again, sell them off, and it's just kind of a recurring cycle.
Does that make sense?
I've taken accounting. I don't have numbers right
Yeah.
Yeah, all worked out. Okay.
So yeah, so basically, banks were handing out subprime loans left and right, and it turns out people weren't able to pay, and when you're not able to pay, when the crash happened.
So a
think
lot
that's
of
Well, also they hand out so many loans that they only had like $5,000 in cash, but they're handing out $300,000 loans.
Yeah.
Yeah.
They can do that even though they don't actually have the money.
the one thing Aiden, I was really, by the way,
Tricky just to go no.
I was
Do it.
expecting you not to say anything. So very good, by the way. You actually listened to me.
That's why you said I'm a finance class.
So, but yes, the main reason was this, is that McKenna, you have prime credit. Travis has prime credit. Aiden has prime credit. Miss Vita has subprime credit. But Miss Vita, though, because the bank did not double check Miss Vita's application, thinks that she has prime credit. But in reality, subprime. Guess what? I lent or borrowed from the bank too, and I had subprime credit, but I said, like you, I make all this money. Well, what happens is if our two loans, Miss Vita, are very high, say that just us alone was $100 million, and theirs, and we're pooled, and theirs is say 400 million. Well, what ends up happening? We got $500 million worth of loan here, but we're a pretty big chunk, aren't we? We have a very large chunk. So if we stop paying, what happens to that whole pool of money here that's $500 million? Now you get a big chunk of it taken out. which then ends up basically, you start seeing these little bubbles pop, okay? And over time, the more that pop, what happens? You end up, you're running into more debt. You run into where the whole economy basically collapsed. Any of you ever heard Enron? You remember the Enron?
Yeah.
Enron was where Bernie Madoff was going in that situation. Bernie Madoff came into this particular situation and ended up was saying that we have this amount of money, when in reality they were broke. They had no money.
Enron just forged all their numbers.
Yes. And so in accounting, as you know, a lot of times you can work those numbers to make it look like, oh, I got a lot of cash, when in reality you're broke.
Yeah.
Okay. So yes, very good in that situation, but that's kind of where fraud is. And the reason they talk about the lender is because back in the quote unquote good old days, as some agents will say, used to, what would happen is Miss Vita, if you had a seller and I had a buyer, me and you would buddy, you're with Keller Williams, I'm with my own brokerage, we would buddy up and say, you know what, Vita, I know that your property, you got it on the market for $300,000. You know, Aiden ain't gonna appraise that. You know, he's really by the book. But Travis over here, I know Travis, he'll give us $300. All we got to do is tell Travis, we'll give him a little money on the side. So you good with me using Travis? Yeah. So we'd bring Travis in. He would quote it at $300,000. We give him a little side kick under the table. And what ended up happening was the lender, if Aiden could pay his note, then what happened was he defaulted, meaning you walk away with money. You walked away with money. Who's getting injured here? The lender.
They should have been forging their numbers in the first place.
That's right. So in those situations, that's why now, as a real estate agent, you no longer can pick your own appraiser. You can no longer end up picking really anyone.
Yeah.
Okay. You are an assistant, quote unquote, to your client.
Yeah.
Either seller or buyer. You're just a person that they're hiring to help them sell a
You
property.
can give them recommendations as far as like inspectors. Like,
Yep.
There's an inspector. I know, like I used Ryan for Tyler's house. I knew him. I went on inspection with him once. Super nice guy. And I saw when he went out there, like it was a pier and beam house. He opened the grate, crawled under the house for 15 minutes, and took pictures of all the beams and everything. So I know he like did his stuff. And so whenever my brother was buying a house, I was like, I advise you to use this guy. It'll cost a little more to have him drive down because my brother bought a house in Houston and he was here. It'll cost a little more to drive down to another extra $100, $150, but I promise it's worth it to make sure this house isn't going to fall apart. And I'm not telling him to. He can say no. That's totally. I'm not forcing anything on him. But it's just a recommendation I gave because I saw him work and I know he's good for it. So
I have clients that will tell me sometimes, say I go to McKenna. McKenna wants to buy a house. And I say, McKenna, I want you to use Travis to do, your inspections, and I want you to try to get the bank to use Aiden. She can tell me, screw off, Justin. I'm not using either. I'm using Rocket Mortgage and I'm using Miss Vita because I know Miss Vita and I trust her. I've had that happen. Sure. At that point, whatever you want, McKenna, whatever you want, because I am an agent. I have a duty to McKenna.
Yeah.
If McKenna tells me she wants something done, then I have to do what she says. No ifs, ands, buts about it. Okay? So you may think, and I've been put in this situation before, Miss Vita, I tell you, oh no, you need to use Travis here. He's my go-to guy. He's an inspector, great guy.
Yeah.
And you're like, well, I want to use Aiden. And I personally know Aiden does a horrible job. But can I tell you that?
No, because you can't talk bad about somebody else's business.
I should not be ending up at all. I should say, while I may not like his services, whatever you want, well, we'll get it scheduled. But you have to, and this comes back to what Travis was saying, when you choose 3 people, you don't ever give one person, I can't say, you're just going to use Travis here. That's it. I have to say, I've got Travis, I've got Aiden, and I got McKenna that are inspectors. Now, my preferred person is Travis. Okay? But my second person is McKenna, and then, of course, Aiden is my third person here.
and I only know
But- Yeah, and this is it. This is all I got. Okay, you can tell me out of all 3 of these, I don't want any of them. I don't want any of them. I'm going to go find my own friend. Or I had one, I think it was Stephen. He had one that his client did not want to pay for an inspector. The client wanted to do his own inspections. So he had watched an inspector inspect the house, went through the whole house, saw what he did. So he thought that I can go out and inspect my own property. So he went out and said, don't hire no inspector, I'll go do it myself. If that happens, you always get that in writing.
Yeah.
Always get that in writing. Because if something goes wrong, who are they coming back after? Coming back after you. And I have had guys and gals, I'm going to tell you, I had a $950,000 house that I was listing in Austin. The buyer brought in an inspector. I guess the guy was brand new. Brought in an inspector, and the inspector left the heating top on top of the stove on for 8 hours while the owner was out of town. The owner came back that evening, and the whole backsplash and the top was burnt.
Yeah.
So it's very key that if the buyer's not going to show up and it's just the inspector, you need to go back behind them and just double check. Because I've had things like that. I've had people leave doors open. I have had them leave bathrooms running. They have left tubs running and flooded bathrooms.
That's why, like, you always go to the inspection.
Yes.
That's what if I'm buying a property or if I'm an agent for someone buying a property, I'm like always gonna be there. Because one, it's nice to make sure stuff like that doesn't happen, but two, it's nice to get not so much a second pair of eyes, but you actually get to ask questions, and as a realtor, it helps me learn more about homes, and you can find stuff wrong and whatever a little bit easier. But then also, like, me and my brother went to that one, and it was easy for, instead of Ryan just sending us, hey, here's a Word document that has some pictures of stuff I found, and it's just like, this is deficient, and this is this, and this is this. It was actually easy to be like, is that good? And I had him like explain why something is okay or not, basically. And so you actually get to you get more reassurance by actually being there and talking to somebody, as opposed to just getting a PDF document and being like, I guess it's good.
And there is no such thing as pass or fail in a house.
Yes.
And that's why the people that I've used, I've vetted them over the years. Like I've got rid of people I didn't like and other ones, but I've had people in Austin where they'll come out and Kenny, you're an inspector. She'll go out and inspect your house, Miss Vita. And if you're there, she'll answer questions while you're there. But if you call her after hours, she charges you $100 an hour to talk to her. Well, that's not right, because if you're working a job 8 to 5, that's not going to work.
Yeah.
You need to be able to call and say, hey, McKenna, what did you find? Or I got a question about this section right here. What was the problem? Could you meet me back out there? Even if with Travis's brother, had his brother had questions, Ryan would have drove back down there and met him at the property.
Oh, yeah, absolutely.
That's just how my guys are.
Yeah.
They will drive. It doesn't matter. He will drive back down there and show you exactly this is your issue. So it's very key when you're going through these things that real estate fraud, you won't always be placed in this. But what it's saying is there may be situations where Travis is an agent and Aiden is the inspector, and he'll try to say, hey, Travis, how about you do this, man? You refer me all your leads, and I'll refer you stuff that I get, but also you give me some money, and we do a little kickback here. That's fraud.
Yeah.
Okay? There cannot be any kickbacks. Now, is there people in town that have they only use this one inspector? Yes. Do I recommend that? No. Because there is 2 agents off the top of my head that I know that they only use this one inspector. They only use this one lender. The problem when you do that is you're creating a situation, you're setting yourself up for potential real estate fraud. Okay? You always kind of have a diverse group, let your clients speak. If that makes sense. I've had lenders that I've referred. There's one lady that I love to death. She's sweet as pie. But if you're doing a house that's under like $300,000, you're kind of at the bottom of her list. Okay? She only deals with 300 and up. But I guarantee you, if you got the money, she's going to be, oh, Miss Vito, what can I do? How you doing? Let me call you. She's on top of it if you're above this price. But if you're only buying $10,000 worth of land, you're way down here. Because lenders only get 1% of the total cost. Like us, if I represent both of y'all, I can get up to 6%. With the lender, they get 1%. You see what I'm saying? And some lenders, they get 0.5%. Okay? So you see kind of why they want the bigger loan, because the bigger the loan, the more money they make. Okay? I'm going to sit down and let you finish. Or let you keep on going.
All right. And that's why I wanted to bring them in, because that helps you understand a little better. All right, so moving on, you have risk management for real estate fraud. So number 1, document everything. I know in the office, Linda is very, very, very keen on if you get emails, you send them to her, no matter what it is. If you're sending an email or receiving an email, you forward it to the admin email account or you BCC the admin email account, and she'll put it in zip forms under like correspondence basically. And so she has a folder that's just your emails back and forth with the other agents or the lenders or whoever. That way everything is documented. If something happens, you have documentation of it. If you say something or they say they're going to do this and they don't, it's not coming back on you because they didn't do something for you. You actually have documentation of them saying they're going to or whatever. And I know also, like, there are agents who will document phone calls where like you will have a phone call with them, get off the phone, and they will like hang up and then try to dictate out what y'all talked about and everything. I know Justin takes screenshots of text messages. So if it's work related and he's talking to a lender or whatever, he will take screenshots of the text messages and throw those like photos in zip forms as well as documentation. So it is good to have everything documented. It can save you so much. I know it saved Justin a lot. He's had plenty of people that have tried to do something to the brokerage or to him or whoever, and he can just be like, well, nope, I have it right here that says they're going to do this, or I have this saying that I tried to. That's again why we say if they don't want an inspection, you have them write it down. That way, again, it doesn't come back on you. You've documented that they refused an inspection. It just helps anything like that not come to you and kind of come back on them. Aiden, if you want to staple those, I didn't staple those. There should be a bunch of copies. Hand over them. I think there should be multiple in there. All right, disclose everything to the lender. So representing the buyer does not include helping them cheat the lender. So your job is not to, there's a sticker up there. Okay. So basically there is the lender is involved in the transaction. Your job is not to help the buyer cheat them out of money or commit fraud like we were talking about. Your job is to basically let the lender know what's going on. How we talked before about communication is very important in real estate. Your job is to talk to the other agent, make sure, the buyer talks to you, you talk to the seller's agent, they talk to the seller, or vice versa, whoever you're representing. That also includes the lender. You need to include the lender. There's often that the lender does not get included in conversations because people just kind of forget. They're dealing with the other agent and they don't really think to talk to the lender, making sure, if something happens with the purchase price, it's now been increased, but they did a counter and now it's this. You just kind of agree to it, everybody agrees and goes their separate ways. You don't tell the lender about that. Well, then suddenly they might not qualify for that amount of a loan, or the lender might have to make some extra steps, and it's not going to take 30, it's going to take 45 days or something like that. So it's just always good to keep them in the loop. However, we were talking about there are certain situations like if you get an inspection report, that's something you don't want to disclose to the lender because if they get their inspection report, there's items they will require everything be fixed, even if it's not a big deal to you. There's just a drywall, there's a hole in the wall where a picture used to hang or whatever. That's not a deal breaker for anybody. You can just fix it when you move in. But a lender might require that being fixed before they give you a loan. So that sometimes there are situations where you might not want to tell the lender everything, but it's good to keep them in the loop as far as communication, making sure they know the stuff that they need to know. And be sure everything is accurate on the closing documents. So again, when you get a closing disclosure that has everything that is being debited or credited to the buyer and the seller, we pulled one up. I know when we were in Stephen's class that had, the survey is this much that comes out of the buyer's thing, and this happens or the sellers and all this sort of stuff. It has who's paying what, how much they're paying, how much the seller's going to get after closing, how much this is going to happen. And I have seen it multiple times where you go through a closing document, everything looks good, and then you realize the buyer's paying for the survey, not the seller, even though the seller was supposed to, or the inspection's actually at the cost of the seller, which it shouldn't be, stuff like that. So just make sure, kind of do a quick scan, make sure everything's going towards the right person or coming from the right person. Like I said, I've seen many times where they have messed this up in just weird ways. So just keep that in mind too. All right, if you believe your transaction is involved in illegal activity, withdraw from that transaction. You are not stuck in a transaction as a real estate agent. A lot of people think that if you sign a contract to if you throw in an offer, you are stuck in that transaction. You're not. That contract, if you remember, is between the buyer and the seller. It's a purchase agreement. You are not stuck in that transaction at all. even if you have a listing agreement with them or a buyer's representation with them, you can back out at any time. That is not stuck on you. The only person losing in that situation is you because you're losing the commission. So you're allowed to back out. I've seen situations where people will be racist or sexist or stuff like that, or they want to, you know, they start talking about, well, if we do this and I get this much of kickback, then we can do that. And it's just like, at a certain point, you have to decide to just back out. I know we've talked to, Justin has given stories of, he dealt with a racist client once that was talking about how they didn't want a certain group of people in their house or whatever. And he eventually decided to be like, all right, well, then if you're going to want to sell this house, you're going to find another agent because I cannot work with you in this situation. So there have been situations where something like this has come up. It's not often at all, but you can, even in the case of, if it's not your client, there have also been stories of, for example, a agent is working with a broker and the broker requests they use a certain lender or whoever because they can get kickbacks from them, or they work with a certain appraiser or whatever, and your broker is the one that's kind of forcing you to do these things and kind of forcing you to have illegal activity, you can at any point withdraw from that transaction and terminate the contract with your broker. You have the right to do that at any point. You don't have to, it's not, our independent contractor agreements are not set for like a certain time frame. I don't work for Justin for 2 years and then we have to renegotiate my contract or anything like that. It's just an agreement that until one of us decides otherwise, I work for him. I am a branch of him as a broker. And so at any point, you're allowed to just say, I'm done with this and back out. There have also been people, I mean, for example, you can do this even if something like this hasn't happened and you work in real estate, you've worked for a year and a half and you haven't made any sales and you just aren't feeling it, you want to get another job, you can just tell your broker, hey, it's not working for me, I'm out, and just back out of your deal. You're not stuck in it for a certain period of time. At this point, if the seller, tell the seller that if he or she intends to continue the transaction, they need to seek legal counsel or legal advice. Again, if they're trying to do anything illegal, just tell them that basically they have to seek counsel in order to continue with the transaction. You're not going to be their agent anymore. All right. The Deceptive Trade Practices, or the Consumer Protection Act. This is the DTPA. We've talked about this before, just kind of in passing. This one big key thing here is you will see this on the test. I know I saw on the test. I know Stefan said he saw it on his real estate exam or anything like that. The DTPA protects the consumer. It will protect the consumer and not the agent. It will find that under the DTPA, you know, they'll ask you, who does it protect? And it'll be consumer, agent, broker, or whatever. It's always the consumer. It is a Consumer Protection Act. So this is an important consideration in fraud that involves licensees. Again, that word licensees, if you notice, it does not say agents, because this is anybody who holds a license. This is an agent, a broker, a inspector, an appraiser, any of those people. They all hold licenses, so therefore this is fraud that involves licensees. So you have false, misleading, or deceptive acts or practices in the advertising, offering, or sale, selling, or leasing of any real property. Real or personal property are unlawful. A way you will see this actually a lot I've heard of is if you have, let's say I have 10 relatives and I want to do some advertising for free, I will just go get a bunch of signs from Justin, 10 real estate for sale signs, and put them out in front of all my relatives or my friends' yards. They know about it, but they just know that, you know, I tell them, like, hey, I'm just going to put this here. It's just for marketing, so people will call me, and then I can kind of help them find another property. But I'm just doing it for that. That is false, misleading, and deceptive, because they are not selling that property. So you cannot put a for sale sign up saying they're selling the property. I have seen this with that, because all it takes is one moment of a guy driving by, seeing a sign at my uncle's house or something, and getting out to go take a better look, and then he comes running out yelling, "Don't get off my yard, what are you doing here?" And the guy's like, "Well, I was just seeing if it's for sale." I was like, "It's not for sale, it's just my nephew wanted that up just to get more clients or whatever." Well, then suddenly that comes back on me as being deceptive because he's not selling his house. You can check. I know I have heard of stories of talking to, let's say, your uncle and saying, do you, hey, I was going to get a for sale sign. Are you looking to sell your property? Well, no. Well, how much money would you be willing to sell it for? And if he bought it for like $250 and he says like $280, $290, then you can put a sign up and say $300,000 or whatever, or $250 or $280, whatever he says. That is fine. You cannot, however, if he bought it for $200 a year later, you cannot put up a sign for $700. Just because if it was $700, he'd sell it. Well, that's still deceptive because the property's not worth that much. You're being deceptive in your pricing of the property. So that is just something you cannot advertise or offer for sale, or lease any real personal property in a deceptive or misleading way. And with the DTPA, you can actually, if you get sued for this, or if you are to sue somebody for this, you can sue for 3 times damages. So it is 3 times. That is also something you probably see is 3 times damages for the DTPA. So if something happens and it was, and another, actually, we might talk about that. I might explain that then. Yeah. Okay. So yeah. So just remember 3 times damages. That's something that you'll probably see at some point. Can you click on this?
So what if it's the seller not disclosing to the agents to move on with their property?
That goes back to the seller, not to you.
Okay.
If you are an agent, it's good to try to be aware of what could, like, if he tells you there's no term, or like there's been nothing wrong with this house, and you walk in and you see like water damage in the ceiling, it's good to be like, what about that? Like, you can bring that stuff to their attention, because then if they didn't know about it, they now know about it. And if they try to pass it off as they didn't know about it, that's when it comes back on them, not on you. So because you were not informed by them, basically. It's an amendment in 2011 to reduce frivolous lawsuits by providing that the DTPA does not apply to claims arising from an act or omission by a licensee with certain exceptions. One of those exceptions is an express misrepresentation of a material fact that cannot be characterized as advice, judgment, or opinion. That is, again, if you misrepresent a fact. So if you say that there's nothing wrong with the house when you know there is, that can be a misrepresentation of a fact. A failure to disclose information concerning goods or services that was known at the time of the transaction, if a failure to disclose such information was intended to induce the consumer into a transaction which the consumer would not have entered had the information been disclosed. That is a long paragraph to basically say, if you were to not say something, that if you did would have caused the consumer to not be in that situation. So if you knew there was termites in it and you said there was not, and they decided to buy the house, but if they knew there was termites there, they would not have bought the house. That is a situation where you have omitted something that has induced them into the transaction. So you have caused them to enter the transaction by omitting facts. One thing they will say in this is that it is also things that either are known or should have been known by a normal person. So if you say there's no termites, and then they do an inspection and find that there are some termites in one of the walls, that is not you being misleading. That is simply you did not know about it. If you say there are no termites and you look at a wall and there's a bunch of holes in it and there are termites on the wall, you should have known about that. Or you can clearly see that there are holes in the wall and what are all these white ants with wings flying around. That's a problem. So that is something you should have known about at the time, that you can't just pretend they're not there. All right, an unconscionable action or course of action that cannot be characterized as advice, judgment, or opinion. Unconscionable just means deceptive in a way, and it also can mean basically something surprising. So if you were to say there are no termites while looking at a wall of termites, that is clearly incorrect, and that is something you are an insane person for thinking that. So that's kind of what that is saying, is that you cannot have any sort of action or course of action that is unconscionable. All right, recovery under DTPA. So there are economic damages and mental anguish. So for example, if you said there were no termites, there suddenly are termites, the buyer has to then go pay an inspection or a pest inspector and everything to come out and check for them, and then get an exterminator to come out and exterminate them. They have to remove a wall because of blank or whatever. they probably have the receipts for that. So you can kind of add up how much that's going to cost. So if it's going to be, let's say $10,000 to remove all the termites and get everything back to how it should have been, and you were deceptive about that, they can sue you for $30,000. So they can sue you for 3 times the damages for that. There is also mental anguish. It is hard to give credibility to mental anguish. In a lot of more conservative states, it's really hard to get mental anguish to count for anything. You can say that it's $10,000 in economic damages and $10,000 in mental anguish because I have kids I'm trying to deal with, and now these people are coming in the house, and I have dogs that's running around. I'm trying to sort them out, and I'm just stressed out all the time. You can say that there's another $10,000 in mental anguish as well, and then you can sue for $60,000 because that is 20 times 30. However, like I said, it's hard to get a court to kind of understand mental anguish. If there's anything they're going to drop, it's going to be mental anguish and say, well, how about you just get your 30 and be happy with it, sort of thing.
Could you be like, well, I'm really scared of bugs, and now knowing that there's termites,
Yes.
yeah, that would count.
Yeah, you can do that as mental anguish, and then say, yeah, and then because of that, I want my, that's another 15 grand. I want my 75 grand now, or whatever. Like you can, yeah. So, you can mental anguish. That is what I would consider, but it's harder to get a court to be convinced of that, I guess. So, if anything is going to be dropped, it is usually mental anguish. If you're asking for 10 and 10, they'll usually just say, how about you just take the 10 in economic damages and just be happy with that. Your mental anguish, I don't really believe you, or whatever. Because it's hard because you don't have a receipt for it. It's hard to give a quantifiable number to it. So you can say 10,000, but you're kind of just making up a number that feels right to you. Well, it could be 8. How do you know it's not 5,000? Stuff like that. So that's usually why mental anguish is. It's the one that was most likely going to be kind of either lessened or removed because of that. The damages increase if the defendant committed the act knowingly and or intentionally. So if as an inspector, I intentionally went around trying to remove stuff to make it look like it was better than it was and all that sort of stuff, the damages are increased at that point. If it is something where it says how it said you should have known about it, the damages will not be as strong, but the damages increase if the defendant committed the act knowingly. So again, if you have a lot of termites outside on your walls or whatever, and you just didn't think about it, that's not so much you knowingly or intentionally doing it, you're just a dummy. Whereas if you tried to cover up stuff, if you've intentionally gone over and like spackled over the holes in the wall to make it look like they're not there or whatever, that's when it comes back to the damages can increase because it was intentionally you're trying to be deceptive. The civil penalties of up to $2,000 per violation and up to $250,000 for violations against the elderly. The elderly are frail, and you don't want to take advantage of it. People don't want to take advantage of the elderly. A lot of scams are particularly pointed at the elderly. If you've ever gotten like the 419 email scam, the Nigerian prince scam, it's known as. Basically, you get an email, somebody saying, basically you get an email, guy saying, hey, I'm a Nigerian prince, I'm stuck in jail. If you can send me this much money, I can promise I can send you millions of dollars back or whatever. A lot of that stuff is it's more portion or more targeted for the elderly because they are more likely to commit those things. I know I used to work at Walgreens, and we used to always have to ask questions to any elderly people, not specifically elderly, but we always ask questions to the elderly people that would come in and do money transfers. We would do like Western Union, like money sending, so you'd send money to another account or whatever. We always ask questions because every once in a while they'd be like the same old man would come in 4 or 5 times in like 2 weeks, and we're like, hey, what are you doing? And he's like, well, apparently my nephew was injured, and so I need to send him money. He's a couple states away. He keeps asking for money for his injury, so I keep trying to send him some stuff. I'm like, have you called him? He's like, no, he hasn't called me, but I figured he's probably busy or something like that. Like, you should call and see if he's actually injured, because I bet that's not your nephew calling you. I bet that you're getting the emails from. I bet it's some random person who you're just sending money to their bank account. That actually happens a lot. I worked at Walgreens for a year and a half, and I saw that, I think, 3 times while I was there. It is insane how often that actually occurs. but that's why the violation is so heavy, is because they're so nice. So it's usually a little bit more susceptible. They're more susceptible to it, and also people just think they're a little bit easier to take advantage of. Also, a broker's errors and omissions insurance policy will not cover fraud or intentional violations. We have errors and omissions insurance because that basically saves us if I am on a contract and I accidentally fill in the wrong blank, or I put in the wrong number, or I go to put $50,000 in cash, $250 in or $200 in financing, and that makes it $250 for the purchase of the house, and I accidentally put $500,000 instead of $50,000 in the first blank. That saves me because we are able to, our errors and omissions insurance covers us in that transaction where we have to fix those errors we've made in the contract. Omissions the same way. If I'm scrolling through a contract too quickly and I don't check if it is or is not in a homeowners association, it's just a little blank in paragraph 7 that you can just miss super easily. If you do miss it, you have errors and omissions insurance to help cover you in those situations. However, if I deceptively go under fraud or intentional violations of the DTPA, it's not like my errors and omissions insurance can cover that. So we pay a fee every month for errors and omissions insurance, and that is the only fee we pay here, and it's the one thing Justin is like, you're gonna get that. Like, that's the one thing that you have to have. You'll get places that'll charge you desk fees and printing fees and all that sort of fees, and Justin's like, I don't charge any fees except for this one because you need it, because it's very, very, very important, because it can save you a lot of money and a lot of lawsuits, just from even really competent agents just scrolling through and kind of missing something here or there because they've done it a million times. So that is why we have errors and omissions, not for stuff like fraud and deceptive trade practices. All right, broker's fees. So broker's fees are not covered in the contract. I know we kind of talked about that. I believe it was Friday when we were going through all those extra paragraphs. Like, I think it was like paragraphs like 9 through 23 or whatever. But broker's fees are not covered in the contract. They are something you negotiate outside of the contract. I believe it is in paragraph 8 where we do the license holder disclosure now. You see paragraph 4 where they had the disclosure, and then paragraph 8 just said that the fees are in a different document. Now in paragraph 8, we have the disclosure, so I would say that I'm related to the buyer, or the seller is my mom or something like that. But now paragraph 8 has that, and then it also has another, like section B of paragraph 8, which is where it says broker's fees are not negotiated in this contract, they are covered in a separate document. So basically, even though at the very, very bottom of the contract, we put 3%, like after everything, we put a little 3% just to show that we want 3% of our money. We are negotiating that outside of the contract. If you have a buyer's rep with somebody or a listing agreement, that is where you negotiate that price. So in a listing agreement, when I first arrived at McKenna's house to go give her the forms, have her sign the IADS, all that sort of stuff, and have her fill out a seller's disclosure like we like to do beforehand, all that sort of stuff, so I can put her house on the market. At that point, when I have her sign a listing agreement that says that I'm allowed to list her house as a exclusive right to sell listing or whatever, that's where we would negotiate how much money I'm going to get from the transaction. My percentage of the fees, my percentage of the commission, how much of that is going to go to the buyer, of the buyer's agent, sorry, all that sort of stuff. So it is usually 6% for a seller and 3% for a buyer. And the reason it is 6% for a seller is that you're giving 3% of that to the buyer. So you both end up receiving 3% commission, but technically the seller pays the seller's agent, and they pay half their commission. So 3 and 3, they pay half their commission to the buyer's agent. So that is technically how the transaction works. Or I guess to the broker, not even to the agent. That is technically how that is kind of played out. So, but that is all covered in separate agreements. It is also often through the MLS system. If we put up an MLS listing, at the very bottom of it, it usually will have, I think it's co-agent and then like not co-agent. Yeah, non-member agent or something like that. And it'll have like 3% and 2%, which basically means that even though the listing agent will get 6%, if the buyer's agent is a member of that MLS, so the BCS MLS here in Bryan College Station, If the buyer's agent is a member of that MLS, they will receive 3%. If they are not a member, they will receive 2%. So the listing agent will keep 4%. That is also something that can be negotiated in separate agreements. I had situations where I wasn't able to do a showing, so I had the seller's agent go do a bunch of showings with my clients. Well, then when they decided to put it in a contract, he negotiated that I should only get 2.5%, not 3%, because he did all the showings. So he did more work than he did part of my job, so he should get part of my commission, all that stuff. The thing is, he just put it in the contract where you put 3% down at the bottom. That isn't binding. I could have gone through the whole transaction and still said, well, actually, I get 3% because the listing agreement said so. So just because it's in the contract, that actually doesn't negotiate anything. That doesn't really mean anything. It's just a statement he was making to say, hey, when we go back through all this, he can go back and we can correct that to be 2.5% for me. But that was just something he wanted to point out, saying that eventually we're going to get back to our other agreements and fix this to make it back. But yeah, they're not covered in the contract themselves. They're covered in other agreements. Another thing to talk about actually right here is with the MLS system and with agreements and stuff like that, I have shown houses that said that I would get 1% of the commission because in the MLS they put 1% for a member agent, and I have shown houses that said I get 3%. So it's all, I mean, you can put whatever you want in there as a listing agent. You just have to know that while I can't pick houses for you to go to, if you want to do a lease, and I'm helping you, like Aiden, I'm helping you lease a house, there are lease agreements that say that I get 100% of first month's rent. There are lease agreements that say that I get 50%, I get 15%, I get 20%, I get stuff like that. They can be all over the board. Now, if I'm showing you a bunch of properties, I cannot not show you the ones that I get less commission. I cannot show you 5 that I get between 50 and 100 and not show you any that are less. Even though you want to go look at them, well, how about we just go look at this other one instead that gives me more commission? I cannot do that. That is called steering, and that is illegal. That is a deceptive trade practice. You cannot steer clients. Another way that steering is used a lot is if your client is, let's say you think they're a little bit lower class and I don't know, and you think they would fit better in like downtown Bryant here as opposed to like South Central College Station or something like that, then you cannot solely show them properties in that area because you think they'd fit there better because they're lower class or whatever. That is steering. You cannot be prejudicing to your clients. If they want to go look at something in a different area, they're allowed to do that. You see this a lot with race, where people will think that, well, this certain part of town, it's only African Americans. So if I have an African American client, I just want to show them stuff there because that's where they are. That's illegal. That's you being racist. That's you being deceptive. And you cannot do that. You cannot steer people. That is another way we'll see this, besides for just you wanting your bigger commission or whatever. However, if I was showing a property that gets me 1% commission, and I was showing another property, same price, that I get 3% commission, I might walk into the first property and open the door for my clients and go, all right, this is it. If y'all want to walk around, take a look, let me know what you think when you're done. They walk around for 5 minutes, come back, close the door. All right, you like it? Yeah, I think we like it. All right, cool. Let's go to this other one. We go to another one, and I walk in. Oh, look at these new vinyl floorings, and look at this on the wall here, and oh my God, these things are so cool. Don't you love the staircase and stuff like that? And I'm pushing the other one more. That is allowed. As much as that seems deceptive, you did show them both properties. There's nothing against putting more effort into one than the other, as long as you have shown them both properties. So it seems like you would not be able to do that, but that is something you actually can do. It's something you also do not knowingly. Again, I did show somebody a house with 1% commission, and I really didn't try. Not that even I like tried to not show them the house. I can't talk bad about the house. I can't walk in and be like, oh, you don't want to live here because I heard down the street this guy lives there and he's a pedophile. You don't want to live here because this thing happens, and look at that. That can't be good, and that's probably wrong, and this is probably messed up. You can't talk bad about it. You can't make up stuff that's bad about it, I should say. But, you know, I did open the door, kind of flipped on some lights, and was like, all right, y'all let me know. If you have any questions, I'll answer them. they asked a couple questions about stuff on the MLS sheet or the type of neighborhood it's in or whatever. And even though I can't disclose like who lives in the neighborhood, like what type of people are in the neighborhood, I can just be like, oh, this is a school district and this is this stuff. I can give them kind of material facts. But when we went to the other house, I was a little bit more involved. I turned on all the lights. I followed them into every room. I answered questions a little bit more thoroughly and stuff like that. I'm still doing my job on both houses. It's just one of them I put a little more effort into. That is not, there's nothing wrong with that. I still showed them the first one. They still have the right to buy the first one. I still would have put in a contract for them and everything. I know there have also been situations of if you're doing a lease and somebody signs a lease that gets you 10% of first month's rent. First month's rent is $800. The whole contract you just paid $80. Like, good for you. You did a month's of work and you got $80 from it. I hope you're happy. I have seen situations where something like that will happen, and then after that, you know, you get a call from somebody and they're like, hey, did you show Linda around town and help her get that house? Yeah. Oh, cool. I'm one of her work friends. I'm looking to sell my house, and it's $680,000. But she really liked you, and you know she talked really highly of you. So I wanted to use you if that's possible. Every situation is a marketing situation. Not so much that you have to be marketing yourself all the time, but you have to realize that everybody you talk to has people they talk to. So just because you help somebody make $100 on a transaction, that does not mean it's not worth it, because you never know who they talk to. I have heard of clients who will show somebody a house, and after they find an apartment for them to rent or whatever, or a house for them to rent in, it turns out that they were married to a lawyer or something who they had a divorce. The lawyer kept everything. Now she has nowhere to go with her kid. They moved to this tiny apartment that you helped them lease out of. But she still knows all of her friends she used to know when they were married and had all these friends that were part of the law firm and everything. A lot of them sided with her. So it turns out while you helped her find this tiny apartment, you get a lot of leads from these other people who have really big houses that want to sell you, or buy more houses or whatever. So just remember that in every situation, I mean, I used to work for Advocare, a direct sales company, and it's kind of those things you just kind of always have to be marketing. Again, not that you're pushing yourself all the time, but just understand that even if I go out with Abe and play disc golf, there might be somebody there who I run into who's talking about selling a house and they don't know who to go to. There's always situations for you to be in a situation to market yourself and to kind of push your name out there. You also never know when you're going to be out doing something, acting a fool with some friends, and then you get a call to the office. They come up to meet you and go, oh, it was you. I saw you last Thursday at this place. You were acting insane or whatever. I don't want to work with you. And you just lost a client because you're being an a-hole on a Thursday night or something. So, the party man. Yeah. Every Thursday. But so yeah, that's just one thing is like you, again, going back to this, you have to show them everything, but you do not have to put your full effort into everything, but just always remember that people are watching you. And so if you don't put your full effort in, it shows that you're not a super hard worker. And if that's all you get to do for them, they're probably not going to come back when they have more money or whatever. So just keep that in mind.
Yeah, you're creating a brand.
Yes, you are creating a brand. Yeah. All right, so the fair housing laws. So in the sale and rental of housing, no one may take any of the following actions based on race, color, national origin, religion, sex, familial status, or disability. Refuse to rent or sell housing, refuse to negotiate for housing, or make housing unavailable, or deny a dwelling. Now this is extremely key. So the fair housing laws, you will see this. We'll talk about this a lot more kind of in our principles course. We kind of go into a little more of the fair housing laws and being deceptive and stuff like that. We kind of go a little more in detail and stuff like that. But basically, if you are working for a client, like what I was saying earlier, if I'm working for, that's kind of, I love the way Justin put it because he was very blatant with it. But let's say I'm working with Aiden, and I'm trying to sell Aiden a house, or he's renting out his house or whatever, and Aiden just really doesn't like Asian people. Well, if I have a client that comes up, let's say let's say I have a person who comes up, they pass everything, they want to put in their application for it, they pass all the things, and I go tell agent, hey, congratulations, we have somebody who's looking to rent your property out. They're qualified for everything, want to pay everything. Yeah, it's actually it's a foreign exchange student from Asia that's coming by, and he's like, oh, I don't want them here. Well, at that point, at least for me, I'd say, all right, cool, have a good day, and it's over. Like I'm not talking to you again because I'm not getting caught up in that. Not only do I not agree with you, but I don't want that coming back on me in any way possible. So at that point, I'm out. I'm done. You're not gonna see me again. Now, it is their. They do not have you do not have the right as an agent to refuse service for anybody or refuse renting or selling a house for anybody. If that person really is really adamant that they don't like a certain type of people, just back out. Just leave. Yes.
What if they're felons or sex offenders?
Who?
The people they don't want around their house or in their house or in that neighborhood that they're trying
So like the potential buyer was ex-con.
Like an ex-con or something like that. That is not covered under the fair housing laws. So technically, I guess that would be okay. Have you heard of anything like that?
No, not in terms
I haven't had that
taking
situation
on
happen at all.
no.
So I haven't had that situation ever happen, so I'm not 100% sure.
Well,
But
could technically a buyer be like, oh, someone who's here, like I smoke weed, I don't want to be here because they're nasty people.
Yeah.
Because
If you
that
have
could be like some also attributed to something else.
yeah, so for a buyer, it's a little bit different because they can, if they don't want a property, they can just not put an offer in or whatever. As a seller, it's a little bit trickier because you have to allow everybody the opportunity. You cannot change if somebody is let's say somebody you're renting to somebody, this actually happens a lot in town because it's a college town, where people will say, I'm renting out this house, but I don't want any college students here. I know the house I moved into, the guy was very adamant, not so much that he didn't want college students, but that he was like, oh yeah, that person on that street, they're actually in their doctorate program, this person's doing this person's doing this person's married with 2 kids, but none of them were like freshmen or sophomores in college. And he wasn't trying to push us away from it, he was just mentioning that. But I know there are a lot of people who will say, no college students allowed, or whatever. That is, you cannot do that. Because that is technically, you're kind of coming into the familial status, where you can't really discriminate on age, but you also can't discriminate on, well, I want this person to rent my house, I don't want this person because it's just a single mom with 3 daughters, and they're going to be drawn on the walls, and I don't like that, or whatever. You can't discriminate against familial status. So if somebody is married, not married, has kids, doesn't have kids, you can't say I don't want them because of that reason. But going back to what you said, I'm not 100% sure. I'm not sure how that would work. So, but that's a good question. Yeah. So basically, if anything like this comes up, back out of a deal. For me personally, I'm not getting my license revoked because you're racist. So. Good luck. So you can deal with somebody else if you want to be that way. They might find somebody who's wants to be like that. And all it takes again is if somebody comes to look at the property, they qualify for everything, and I go, hey, sorry, but you didn't make it, and they say why. Well, you kind of met all the requirements, and then it's kind of my job to like explain to them what happened. You don't want to be stuck in that situation. Also, if it comes down to it, and you kind of work your way around it, we don't have to explain it to them. All it takes is them going online, public records, they can probably find your seller or your landlord's numbers, call him up and say, hey, I qualify for everything. Was there any reason that you didn't let me in? Well, I don't like Asians. Well, okay, well now, going back to that, they come back at me for being discriminating and not having fair housing laws. And then suddenly I'm wrapped in it, even though I didn't know it all in the first place or whatever. So just something to try to be aware of. In the sale and rental of housing, no one may take any of the following actions based on race, color, national origin. Same thing. You cannot set different terms, conditions, or privileges for sale or rental of a dwelling, and you cannot provide different housing service or facilities, and you cannot falsely deny that housing is available for inspection, sale, or rental. Now, what this first kind of line is for is, again, you cannot say, if you get a credit score of 720, I'll allow you, or let's say 700, you're good, but since you're a woman, you have to have a credit score of 720. You cannot discriminate, you cannot set different terms or conditions based on any of these things. So, say conditions or privileges, again, so you cannot say you have to have a certain credit score, unless this, then you don't have to, or the other way around. You cannot provide different housing services or facilities. You cannot say that this person, part of the rent also includes a maid service and a lawn care. Except for you, I don't like you, so you don't get the service or the lawn care, stuff like that. You don't get access to this, you don't get access to the laundry room, or you don't get access to this or blank, you don't get access to the pool because I don't like you. You can't do any of that stuff. Falsely deny that housing is available, that would basically be saying, if I have a house up for rent, and then Aiden goes, hey, we have these people coming in, and they're Mexican or whatever, I can't be like, oh, well, then it's not up for rent anymore. And he can't go tell them, like, sorry, it's not on the market anymore. He's actually looking to sell it, not rent it, or whatever. You can't falsely deny that it's available.
I don't blame them. Mexicans party for like 3 days. They never stop. I would know.
Aiden says that. She's like, fair. Yeah, fair. That makes sense. You cannot, let's see. Yeah, you cannot discriminate on for profit, persuade owners to sell or rent. This is blockbusting. So I know we actually talked the other day about going home to home and kind of marketing yourself and trying to get, walking around and being like, hey, this home sold just a couple doors down for this much money. If you'd like to sell your house, whatever. That is fine. You're allowed to do that. That is just marketing. You are not allowed to blockbust, which is basically another phrase I like to put here is panic selling. You cannot induce panic selling. You cannot go in and be like, hey, I saw that a couple college kids moved in next door. You need to sell your house now, or else this whole neighborhood's going to be run over, and then your house is not going to be worth anything. You cannot induce panic selling. You see this a lot with different races. You'll get white neighborhoods where a black person moves in, and then suddenly you get people walking around going, did you see what happened? We got to sell the house now. You cannot go around and falsely persuade owners to sell because of panic selling. You cannot deny anyone access to or membership in a facility or service, such as a multiple listing service. If you have something up for rent, but they are a different race or color that you don't agree with, you cannot say, well, I won't put your house on the MLS service. That is part of our marketing job. We put everything on the MLS. So you cannot deny access to them for that. All right, so this is protection for people with disabilities and opportunities for families. Basically, one thing that the Fair Housing Law, it didn't actually have this all the time. It was added fairly recently. Protection for disabilities. It seems weird. I think it was it Fair Housing we were talking about that added disabilities in like 1995 or something like that? So it was, okay. Yeah, so if I'm having this right, Fair Housing Laws have been around for a while. I guess, was it? Yeah, it was DTPA. Okay. So fair housing has been around for a long time. You cannot discriminate against race, color, national origin, sex, all that sort of stuff. I think it was in 1995, added disabilities too. It took till 1995. So it's yeah, it seemed like it should have been done before that, but it took till 1995 to add disabilities to this. But it provides protection for people with those and opportunities for families. This is again in a similar vein, not quite the same thing, but this is similar to why apartment complexes have to have either 2 stories of, you can have stairs up to a second floor if there's rooms available on the first floor for people who are in a wheelchair or whatever, or you have to have a ramp and stuff like that. It kind of comes back to the same thing of fair housing. And opportunities for families, again, familial status. You cannot discriminate against, especially like in a college town, you can't discriminate against people with families because you want single people to be living there or whatever. All right. Required disclosures. So everything the seller or agent know about the condition of the property must be disclosed to potential buyers. This is very key. If you know, again, let's just go back to it. If you know there's termites, you have to disclose that is the case. You can't just knowingly omit stuff. If you know something about it, You have to disclose that to the buyers. Any information or reports regarding the roof, structure, electrical, plumbing, drainage, etc. must be shared with the buyer to prevent future lawsuits. That is what the seller's disclosure is for. That is where you can have that the roof was repaired here, that we actually redid the foundation this year, stuff like that. I have seen houses that have had, a good thing for foundation to notice is if like above a door frame, there is let's say this is a door frame, you have a crack going up to the corner of the room. That is something that is usually foundation. That is the house shifting, and that is just a weak spot is that corner of the wall, and you'll get a crack from there up to the ceiling. So I've seen houses that have stuff like that in it. You cannot technically go, that's foundation issues, because you're not an inspector, so you don't really know that firsthand. There could just be settlement. If the house is 70 years old, it might not be foundation issues. It's just the whole house, so stuff's moving and bowing and whatever. So that's not exactly foundation problems.
But you could point it out and be like, this might be something to.
Yes, you can't point it out and be like, hey, if you have an inspector come by, have them look at that, or something like that. You can't point out potential things. You just can't. You can't say you know what you're talking about, basically, because you're not an inspector. So, but how we talked about before, if you like used to be an electrician and you notice stuff that like that's not good as an electrician, I know that, even though I don't do that anymore. I'm a real estate agent. I know that. You can knowingly tell them about stuff like that. Just as a home inspector, that is not your job. If you used to be a home inspector, you can point out things that you can see that can be a problem, but you cannot be like, foundation, and that's because of this, and that's because of that, because you're not 100% sure in that moment. But any reports or information would go in the seller's disclosure to prevent future lawsuits. Let's see if I have this right. Oh, yeah, this is again, just on inspections. If you're a seller's agent, don't ask for a copy of the inspection report, just leave it. That seems, if you have clients that want to know what's wrong with the house and why these people back out of a transaction, don't. They're entitled to whatever. You were just an agent of them, like Justin said. If they really, really, really want it, you can get it. Just inform them that if they send us a report and stuff's wrong, we have to fully disclose all that stuff on the seller's disclosure and everything. So it's just sometimes better not to know. You also, again, everything's an opinion. If you get an appraisal, well, it might seem like, well, that's what the house is worth. That is just somebody's opinion. Whoever's the appraiser that came out and did it, that's their opinion. An inspector might see something and think blank, while another inspector might see something and think a different thing. So you might have a house that you've just fully redone the foundation 3 years ago. An inspector comes in, sees something, and goes, nah, that foundation isn't good. Because there's a line on that door. When that might not be foundation. That could be something else, or it could have been there before you fixed the foundation, and you just haven't covered it up yet or whatever. So if they come back and say there is still foundation issues, you don't want that report back, because then you have to disclose that there are still foundation issues in your seller's disclosure, even though there might not be. So again, you can fight that in certain ways. You can provide documents here and there to get your way out of that, but it's just easier just to not just. You don't want it. You don't want it because it can make things a hassle. And again, with seller's disclosures too, you will have clients that really don't want to fill them out and will refuse to fill them out. That is hard, and it's kind of a tricky situation to deal with. But if they really don't want to, they don't have to. All you're doing is you're allowing the buyer the entire contract to terminate because of things they see. If you remember when we went through the contracts, if they don't provide a seller's disclosure, the buyer can back out at any point through the entire transaction, not just through their option period. But if you have a seller that really, really, really doesn't want to fill out a seller's disclosure because they don't want to write stuff or whatever, you can advise them. I would tell you to advise them that it's best, and if they don't, they can get sued, because again, if you don't have any reports, you cannot prevent future lawsuits. So it's best to advise them that you should fill out a seller's disclosure. It can protect you from getting sued and all sorts of stuff. If they still say no, then they don't have to. Honestly, at that point, I'd probably have them talk to Justin, because Justin could probably explain it in a way that might make them understand it, just to get another voice out there to be like, no, that's probably a good idea. But if after that they still were like, no, I don't know why you have to tell me this, then they don't have to do it. Again, if they get sued, that's not coming back on you because as long as you get it in writing that you advise them to do it and they refuse to do it, then you're covered. If you have documentation of you sending them an email saying, hey, I advise you do this and that, and they say, screw you, then cool, that you have documentation of you sending an email, they responded to it, all that sort of stuff. How you were saying if they don't respond, they could have did like all that sort of stuff at the beginning of the day. You can, if you've been using that form of communication as your main form of communication, it is still technically valid. So even if they have like 4 email addresses, they can be like, well, I don't check that one all the time. But if that's the one you've answered all my other emails with, that has been our main form of communication, you have been notified. Even if you haven't responded to the email, based on the other, based on all the previous things we've seen, you saw the email and just deleted it. So you can be covered that way as well. Yeah. All right, the seller's disclosure notice signed by the buyer is the seller's proof of disclosure. That seems fairly obvious. Having a disclosure basically is their proof of disclosure. Now, this is something, again, I would say you must complete, but if they don't want to, they don't have to. It's just, you would highly advise that they do it. Paragraph 6E, 1 through 10 disclose many things to the buyer that are required by law. That is a bunch of stuff in the title commitment. There were all the title notices about the abstract of title and all that sort of stuff. That is what all that, that's what 6E, 1 through 10 is. It's just all those notices. They are not anything you have to fill out. It's just a page of notices that are basically just from the title company. It's just notices that the title company requires we give to each other.
Is this paragraph on the seller's disclosure? Or
This is on the contract.
Okay.
That's good. Yeah, this is paragraph 6E of like the 1 to 4 family contract. And when you're using, if you are using other than the TREC form, you have to be aware and give those required notices by a different method. There is like a TREC seller's disclosure. There is a, or I guess, sorry, if you're using other than the TREC contract form, if they require something else, or they want to use a different form for some weird reason, you have to still give them this these 6E 1 through 10 notices. You just have to do it by a different method. And like I said, this is something you want to highly, highly advise they do. But again, it comes down to the client themselves. If they don't want to do it, like Justin said, you're their assistant. So if they don't want to do something, you can't force them to do anything. You can just advise them that it's best for them. All right, permitted disclosures. So disclosing a suicide that took place in a property is not required, but is permitted if the seller chooses to disclose it. So if something happens, if a former owner of the property committed suicide in the property, that is not something you have to disclose on all your, you don't have to put that on the MLS. You don't have to disclose it to every buyer that comes in. However, if the seller permits you the ability to do it, then you can disclose it. It's something you're allowed to disclose if the seller permits it. I know in Austin and in Houston, I don't really know of any here that do it. Justin was talking about a creepy house down the road they went to. But I know in Austin, they actually have like ghost inspectors who like clients will hire a ghost inspector to come out and like feel the property and see what they think and get energies from it and everything. So it's something they're allowed to do. But again, this is not something you have to disclose as a seller's agent. But if the seller chooses you to disclose it, or chooses that it can be disclosed, you are then allowed to if it comes up. The disclosure of registered sex offenders in the neighborhood is not required, but is permitted. Now, so what this is saying is that you do not have to disclose if there are registered sex offenders in the neighborhood, but you can. I would say that you shouldn't. Now, I know that seems weird, and you would think that you should, but if there are plenty of like databases you can go online and look up and see who's a registered sex offender and where they live and all that sort of stuff. Now, the reason I say that you can, but you should not ever disclose about registered sex offenders is that if I go on that database, and if any of y'all have worked in a position like this, you know that databases can always be wrong. I know Stefan was telling a story about, he just actually did a closing a few months ago where they got to closing and the title company found that the seller that he was working for owed $15,000 in child support. He was like, I don't have a kid. And it was just another dude that had the same name as him. but the title company looked it up, saw his name, thought it was him, put it on his stuff, and their database was wrong. So they figured everything out and got it all to like, they worked everything out and were like, that's not me. I don't have a kid. I'm also not like that. That kid isn't. I've never been there. I don't know. Like it's like
Yeah.
it was very like it was a weird situation, but they worked it out and basically confirmed it wasn't him. But databases can be wrong, and so if I go on the registered sex offenders database and look up, and we're looking at 123 Main Street, and I see that at 127 Main Street, I don't know. Let's say Aiden lives there, and I saw that he's a registered sex offender on the website. If I go in, I destroy Aiden every day. It's easier to destroy him when we work together. It feels safer to me. But like, let's say I see that he lives there or whatever, and he's a registered sex offender, and then I go to the property and I say, you don't want to live here because Aiden's over there, and then the seller or the buyer goes and tells her friends like, oh, I heard in this neighborhood Aiden's over there, and it turns out the database is completely wrong, and he's not a sex offender. It comes back on me as slandering his name and defamation and defaming his character. So that is something you just don't want to be in that situation at all. Love you, Aiden. But you don't want to be in that situation, and so that's why, even though it seems like this is something you want to tell your clients, I would just advise them to go look it up themselves. It is something that if they want to, like, I would highly advise that you tell them to go look it up. Like, it's something they should know about, but you don't want to go look it up and get all the data points and then come by and tell them everything, because again, if it comes off incorrectly, it comes back on you as you're the one who's slandered their name and you can get sued for it. I wouldn't even, I think Justin said he wouldn't even give you the web address of where to go to look it up, because there's plenty of databases, and if he tells you to go look at this one, you go look at it and find somebody, it can still come back on you for them giving you the address to go look it up. So there are, like I said, there are plenty of databases. Just tell them to go look it up. There's plenty of databases. You can just Google search it, look up sex offender database or registry or whatever, and you will find it. And just let them go do that on their own time. But even though it's permitted, I just wouldn't. It just makes it easier.
What if there was a murder going on the side of suicide? Suicide. Oh my gosh. I can't say this, but like murder and suicide.
I don't know.
Okay.
I'm not sure.
To be determined.
To be determined. Yeah, we'll ask Justin a little bit.
Yeah.
Because I'm not sure about that. That's a good question though. Okay, so we have prohibited disclosures. So a good business practice is to never disclose anything about any of the fair housing protected classes. Now what that is basically saying is that don't basically it's just best practice to not get into a habit of being like, oh yeah, there's a bunch of Asians in these neighborhoods, or oh yeah, it's all Hispanics here or whatever. It's just best not to get in that habit, because you don't want. It's best not to disclose anything about that, because if you disclose that and then they don't want to do it because of that reason, it can come back on you. So just leave it alone. just don't disclose anything about the protected classes. Just let it sit. HIV, illness, and AIDS are included in the handicap portion of the Fair Housing Act. So that is included in the disability. Basically, I think it'll say it. Go to the next slide. So the disclosure that a previous or current occupant has AIDS or HIV-related illness is not required. HUD, NAR, and the Canons of Professional Ethics of TRILA advise against disclosure. Basically, never disclose if somebody has had AIDS or HIV. If you are selling a property with somebody who has AIDS or HIV, don't put it in the MLS. Like when you come show the house, please wear gloves and whatever, because the owner has AIDS. You cannot, just don't disclose that ever. That is a protected class under fair housing. That's actually, I know it seems weird, but that is actually a very, 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 like you can get in a lot of trouble for disclosing that about certain people. Yes.
Doesn't it have to be fresh to be able to like transmit?
Yes.
Yeah, you can only be transmitted through.
People
certain
still
practices.
believe that. That's the thing, is that yeah, you can't just get AIDS from being around somebody with AIDS, but there's still people who don't believe that, or still believe that you can.
I've heard the health class though. Like
Yes.
middle school health class.
Yes. But so basically, it's just, I mean, trust me, you will see this. What is something you can never disclose about? HIV or AIDS. Just don't disclose it on that. It's just, I know I'm harping on that a lot because it is very important. And it's something that's very important, but can be easily just missed. It doesn't seem important. People can just do it not knowing it's really bad. So or at least it can get them in a lot of trouble. So just as a practice, just don't do that. Yeah, and then so like I said, the HUD, NAR, and Canada's Professionals Ethics and Trella advise against the disclosure of inquiry or responses regarding the issue. If somebody asks you, oh, does the owner of this house have AIDS? You can't disclose it. Or if they ask you, does people around here or whatever, you can't disclose any of that. You probably wouldn't know that anyway. But yeah, but if you just can't disclose any of that. So that is everything for tonight. Go ahead.